Uh, Welcome back. Well, on the GDP numbers itself, we've got the Economic Affairs Secretary, Mr. Shaktikanta Das, joining us now. Mr. Das, thank you very much for joining us. Well, the good news appears to be that the GDP for the fourth quarter has come in at 7.9% against our poll, which said 7.6%. Do you think this is laying the ground for, the overall GDP doesn't change. The full year has come in at 7.6 as the advance estimates indicated. But there has been a reduction in the third quarter. Fourth quarter looks very good, 7.9%. Would you say this is good news, a recovering economy?
I think overall it is good news because the Q4 numbers are definitely very encouraging, and I think it's good evidence of the fact that the various measures which the government has been taking over the last couple of years, they're, I think, beginning to show results, and overall there are green shoots, and Q4 number of 7.9 and with the annual figure at 7.6 is very, very important for Indian economy, because the previous 2 years compared to the last 2 years, the 2 years prior to that, we were below 7% growth. And now we are back at 7.2 and 7.6. So this year, hopefully with a good monsoon, I think we should look at a growth closer to 8%. And this is this is as per our expectations. And I think the policies of the government and the reform measures are bearing results. And together with that, let us also look at the 8 core industries data which has been released today, where the growth today is about, in the month of April, it's about 8.5% compared to about 6.4% in March. So overall, I think the trends are very, very positive.
Oh, yes, sir. The core sector 8.5 per se by itself sounds very good. It's just that it's coming on a base of minus 0.2 in April. So that was a little bit of an advantage, which the April 2016 number always had. Its base was very bad. But just to come back to the GDP number, as you said, 7.6% GDP over 7.2% in FY15 is per se a very good place to start. I want to come to the demand side. Private final consumption expenditure has grown by a very good 8.3%, but capital formation is contracted in the fourth quarter by minus 1.9. Is that something that we should brood over?
Well, I didn't hear you very clearly, but let's look at the capital expenditure of 15-16 and the annual accounts, the provisional data of the annual accounts 15-16 have also been released today.
Yeah.
Now, the capital expenditure, that is money flowing out of the budget in 15-16, stands at 2,35,000 crores, which is roughly about 38,500 crores, higher than 14-15. Okay. So, therefore, the thrust of the budget has been mainly on capital expenditure, and so far as planned expenditure is concerned, I think in last several years, 15-16 was the first year when the actual planned expenditure at 4.71 lakh crores exceeds the budget figure of 4,65,000 crores. So therefore, that also is a very positive trend. That you have to see that contextually when there are global headwinds, when the overall global economic outlook is pretty grim. It's India which stands out, and the capital expenditures are up, the planned expenditures are up, the growth figures are up. Of course, these also call for more concerted efforts in certain areas on which the finance minister has already spelled out his action plan in the budget. So therefore, I think overall the trends are very, very positive, and we need to capitalize on them.
Oh, absolutely. It's just that 8.3% private final consumption expenditure is damn good. It is just that capital expenditure in the fourth quarter, which is what I was trying to tell you, gross fixed capital formation in the fourth quarter has contracted by about 2%, but consumption has gone up, especially private consumption, by a solid 8.3%. How does all this, set us up for the current year, for FY17? You think we have two advantages at least. One, that the rains hopefully are normal. So, agricultural growth should be a contributor. Again, exports perhaps may not do as badly as they did in the previous year because our destination guys have got a little better commodity prices. So do you think this sets us up for a much better than 7.6% GDP growth for the current year?
I would think so, because in the economic survey we have projected the upper limit of about 7.75%. So as I told you earlier, even on exports we have taken number of measures, and we expect a better performance this year. And also in agriculture and rural development, the various initiatives announced by the government also are being implemented vigorously. So this year, as I said earlier, we should look at close to 8% growth.
Okay. Well, a final question, sir. There is a vast chasm between consumption-led growth and the investment. If you took the full year numbers, then private final consumption expenditure is growing by 7.4%. Private gross fixed capital formation is growing only by 3.9%. If you only took the fourth quarter, it is even worse. Like we just discussed, 8.3% consumption expenditure, while capital formation is contracted by 1.9%. In this context, you are going to get a pay commission number for the second half of this year. Looks like the pressure on prices will be there, not much elbow room for interest rates to go down.
You see, in fact, incidentally, the fiscal deficit and the revenue deficit numbers are also out today. And the fiscal deficit, the provisional figures released by the Controller General of Accounts, the provisional figures of fiscal deficit for 15-16 is 3.9% of GDP, which is bang on target.
Yes.
And the revenue deficit, very interestingly and very importantly, the revenue deficit in in 15-16 stands at 2.5% compared to 2.9% of GDP in 14-15. Okay. So in revenue deficit also there is an improvement. Now the other point which you mentioned about consumption expenditure and gross capital formation, we are dissecting the figures, and whatever measures are required, to give a boost to private sector investment. The private sector investment should really take off. To give a boost to private sector investment, already we have taken number of measures. The figures, GDP figures are being dissected. We will analyze them, and whatever action needs to be taken by government in terms of policy reforms, in terms of initiatives, that will be taken. Let me also add very emphatically that the reform measures, the policy initiatives will continue to be taken, and in the monsoon session, hopefully if the GST gets passed, about which we are very optimistic, if the GST gets passed, that also it would be ready for implementation from 1/4/17.
Yes.
And that also will have a significant impact on the way business is conducted, and would certainly add to our GDP.
Okay, certainly, sir. I mean, I can only echo your thoughts with that. It is certainly an extraordinary performance on the fiscal front. As you point out, revenue deficit has gone down from 2.9 to 2.5%. I might even add, if you looked at the difference between GVA and GDP, after all, what is GDP? You are adding taxes and subtracting subsidies, and that gap has actually widened. GVA for the fourth quarter is 7.4, GDP is 7.9. So excellent performance from the fisc. No two ways about that. If you added the indirect taxes, it's done very well. Certainly, on that positive note, let's wind up this conversation. Thank you very much, Mr. Das, for joining us with your analysis of the GDP number. So, good GDP number, 7.6%, as the advanced estimates had indicated. And for the fourth quarter, it is a pleasant surprise, coming in at 7.9%, and a healthy fiscal performance as well, as Mr. Das pointed out. Back to you, Arundhati.